Dreaming of financial freedom? Want to retire early, travel the world, or simply secure your family's future? The path to wealth begins with investing. Whether you're a complete beginner or someone looking to take your financial game to the next level, this video will show you exactly how to start investing and work your way to that first million. Stay with us until the end, where we'll share some insider tips to fast-track your success. Understand the basics of investing. Before diving into the world of investments, it's crucial to understand the fundamentals. Investing is essentially the act of putting your money to work for you by purchasing assets that you believe will grow in value over time. This could be anything from stocks and bonds to real estate and mutual funds. Why it matters: risk versus reward. Every investment carries a level of risk. Understanding this balance helps you make informed decisions. Compound interest. This is the magic of investing. By reinvesting your earnings, your money can grow exponentially over time. Pro tip: start by familiarizing yourself with key investment terms like dividends, capital gains, and portfolio diversification. This foundational knowledge will serve you well as you begin your journey. Set clear financial goals. The first step in any successful investment strategy is setting clear financial goals. Do you want to save for retirement, buy a house, or build a college fund for your children? Knowing what you're aiming for will guide your investment choices and time horizon. Why it matters: clarity. Specific goals help you stay focused and motivated. Time horizon. Your investment choices will differ based on when you need the money. Short-term goals might prioritize lower-risk investments, while long-term goals could benefit from more aggressive strategies. Pro tip: break down your goals into short, medium, and long-term categories. This will help you create a diversified investment plan that meets your various needs. Start with a budget and emergency fund. Before you start investing, it's essential to have a solid financial foundation. This means creating a budget to track your income and expenses, and establishing an emergency fund to cover unexpected costs. Why it matters: budgeting helps you identify how much money you can afford to invest each month. Emergency fund prevents you from having to sell investments at a loss during financial emergencies. Pro tip: aim to have at least 3 to 6 months worth of living expenses saved in your emergency fund before you start investing. This ensures that you can handle any financial surprises without derailing your investment strategy. Choose the right investment accounts. Choosing the right type of investment account is crucial for maximizing your returns. Common options include individual retirement accounts or IRAs, 401(k)s, and brokerage accounts. Each type of account has different tax implications and benefits. Why it matters: tax advantages. Accounts like Roth IRAs and 401(k)s offer tax benefits that can significantly boost your investment returns over time. Accessibility. Some accounts, like a 401(k), may have restrictions on when you can withdraw funds without penalties, so it's important to choose based on your financial goals. Pro tip: if your employer offers a 401(k) match, take advantage of it. It's essentially free money that can accelerate your journey to $1 million. Diversify your portfolio. One of the golden rules of investing is diversification. This means spreading your investments across different asset classes like stocks, bonds, and real estate to reduce risk. Why it matters: risk management. Diversification helps protect your portfolio from significant losses. If one investment underperforms, others may perform better, balancing out your overall returns. Growth opportunities. By diversifying, you increase your chances of benefiting from different market trends. Pro tip: consider using index funds or ETFs, which are exchange-traded funds, to achieve instant diversification. These funds track a broad market index, giving you exposure to a wide range of assets with a single investment. Automate your investments. Automating your investments is a powerful strategy that takes the guesswork out of investing and ensures consistency. By setting up automatic contributions to your investment accounts, you can build your portfolio steadily over time. Why it matters: consistency. Automating your investments ensures that you're consistently putting money into your portfolio, regardless of market conditions. Dollar cost averaging. This strategy involves investing a fixed amount of money at regular intervals. It helps reduce the impact of market volatility on your investments. Pro tip: most brokerage platforms and robo-advisors offer automation features. Set up automatic transfers from your bank account to your investment account to take advantage of this strategy. Focus on long-term growth. Investing is a marathon, not a sprint. The stock market can be volatile in the short term, but historically, it has provided strong returns over the long term. By focusing on long-term growth, you give your investments the time they need to compound and grow. Why it matters? Patience pays. Investors who stay the course through market ups and downs are often rewarded with significant gains over time. Avoiding emotional decisions. Focusing on long-term goals helps you avoid making impulsive decisions based on short-term market fluctuations. Pro tip: revisit your investment portfolio periodically, but resist the urge to make frequent changes. Trust in your long-term strategy and let your investments grow. Monitor and adjust your portfolio. While it's important to stay focused on the long term, it's also crucial to periodically review and adjust your portfolio to ensure it aligns with your goals. Life changes, such as getting married, having children, or approaching retirement, may require you to shift your investment strategy. Why it matters? Staying on track. Regular portfolio reviews help you stay on track toward your financial goals. Adapting to changes. Adjusting your portfolio as needed ensures that your investments continue to meet your evolving needs. Pro tip: set a schedule to review your portfolio at least once a year. Consider rebalancing your investments to maintain your desired asset allocation. Starting your investment journey might seem daunting, but with the right strategy and mindset, it's entirely possible to make your first million. By understanding the basics, setting clear goals, diversifying your portfolio, and focusing on long-term growth, you're well on your way to financial freedom. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more tips on how to build your wealth. Your future self will thank you for taking these first steps today.